So tell me about where you see the investment opportunity versus where David Foley was talking more about the royalty. He's also into midstream.
So I strongly agree that you have to look at derivative opportunities. We are in a very different phase than we were 10 years ago when some of the name brands and private equity started emerging. That was very much the land grab era. That's when we saw these companies like Devon and Continental become multi-tens of billions of dollars of enterprises. Same thing for big private equity groups. And it was sort of launch portfolio companies or launch public companies into basins, buy up a bunch of acreage, and then eventually, drill it. That opportunity is really gone. We haven't had a new discovery since 2013 in terms of real new fields. The last big new discovery was the Stack. And so it's a totally different phase of investment. And people have to figure out how to access this acreage. There's also an awareness that you don't have these core shale plays that expand forever. There are cores, they're very specific, they're geologically determined. Your understanding of your rock risk matters a lot more. You have to identify that and figure out how to get in. And so we do that through minority interests in oil and gas wells and drilling units in the core. We also do it through royalties, so I strongly agree with that precursor.
So if we had sort of the land grab, and that was what we saw in the last few years, what's it going to be in 2018, 2019?
So there's three things that are happening right now. One, we're heating up for a major M&A cycle in the U.S. E&P industry, almost certainly. Any energy banker you talk to right now hasn't slept in ages. And it's really on the small and mid-cap side, and it's very live. So we're not seeing it on large cap, so we don't expect to see large cap consolidation, but we will see small and mid-cap consolidation in this space. And there's two reasons for that. One is that there are too many companies. And two is that a lot of these companies have gone through major balance sheet restructuring over the past 2 years, and so they can be combined as healthy enterprises. And there's probably a third thing that's important to mention as well, which is that you need to be a big company to survive in this cycle, because where we are is in a full development cycle. So there's cube development where people are developing full field development for multiple formations. That's very capital intensive. It's very complex, and it also means that you're going to have chunkier production growth. So it's just easier to be a large cap in that stage, and also the consolidation makes sense given how many there have been.